So we are kicking off with our first presentation for today. It's on navigating the deep seas of investment. Our speaker, A. Balasubramanian, CEO of Birla Sun Life Mutual Fund, has more than 17 years of experience in capital markets. He's a renowned name in the mutual funds industry and has been with Birla Sun Life since its inception, leading it to unprecedented heights. May I please welcome Bala on stage? Let's welcome him with a huge round of applause.
Good morning and warm welcome to all of you. First of all, on behalf of Birla Sun Life AMC and myself, sincere thanks to each one of you for making yourself available for our investment voyage. I'm happy to share with you that we have delegates in this room from 96 locations across India. So thanks for each one of you for making it for this event. We at Birla Sun Life Mutual Fund are proud of your contribution and to the industry and your achievements so far. And what we have done already, and look forward to work with you closely in the years to come. As you all know, we had started this investment voyage last year, as we had felt that we were at the cusp of a big turning point for equity investing, as well as for the country as a whole. And we strongly felt that we were at the bottom of the cycle, and it can only get better as we move forward from here on. Let me use this opportunity of exactly repeating what I had mentioned in my speech last year in the same dais, in our first equity investment voyage last year. I quote, "We believe we are at an inflection point as an economy and as an industry. From here on, the growth momentum could be exponentially high if the political outcome in the month of May turns out to be favorable. I am told overseas investors are keener in investing in India, and their confidence goes up substantially if they compare India versus China. And that's why we felt that there is a desperate need, I use the word desperate need, to look at the whole equity investing as a concept. And we felt it is our duty to organize today's event towards this journey and make everyone realize investing in equity is important for long term." Unquote. I'm happy to say that April to March period of last year, Sensex delivered 25% return, Nifty delivered about 27% return, and BSE Midcap delivered about 50% return. And majority of Birla Sun Life mutual fund schemes, equity schemes, delivered return ranging from large cap to small and mid cap, gave return ranging from 40 to 90%. And flows in the equity scheme too has shown sharp recovery, surpassing the previous highest inflow that was achieved in the year 2008. As a result of this, mutual funds were seen net buyers in equity market of rupees 40,000 crores, which Sridhar also mentioned, which normally I say is equivalent to what FIs are pumped in India, though a little short of that. It was short by about 12,000 crores or so. Well, the momentum of last year was extraordinary. There is always a question mark on the way forward. And today's gathering should broadly provide a sense of the way forward, both for our economy as well as for investing in mutual fund at large. Over the last years, we at Birla Sun Life Mutual Fund have seen reasonably good success. Of course, not to get complacent, but recently seen good success in our efforts to reach out to more customers and distributors across the country. Let me highlight few of our success. Our overall assets under management has seen around 50% increase in the last year to about 1,22,000 crores in March 2015 from 86,000 crores of last year. If we break this into asset class-wise growth, our equity assets more than doubled, including net sales of about 8,300 crores, moving from rupees 11,000 crores to near 27,000 crores as of March 2015. And similarly, debt schemes have seen an increase of around 30% from 72,000 crores to 96,000 crores. Our effort to penetrate into retail market did pay off in our asset mix between retail and institutional investors. Our retail assets moved from rupees 24,000 crores in the year 2011 to near 60,000 crores last year. Similarly, our institutional AUM has moved from 39,000 crores in the year 2011 to more than 65,000 crores as of now. I also take immense pride in the fact that we took our learnings and the message from our last year equity voyage to across the market at the length and breadth of the country, to all investors and distributors. We, through our investor education vertical, conducted more than 1,000 events. And through our knowledge initiatives under the umbrella of Nipun, we conducted more than 231 programs for distributors covering all zones around the year. As a result of such a continuous engagement with the distributors across different parts of the country, we have seen our market shares in B15 markets improve from 6.76% where we started, when it was started, to 7.7% as of now. While we have seen success in the domestic market, increasing our penetration, we have also taken our business beyond borders by having physical presence in Singapore and Dubai. Our offshore business has crossed $2 billion assets with a consistent investment performance across mandates. Our growth both in Singapore and Dubai had seen an increase of more than 100% as compared to the previous years. We also did a play in getting FI investors into India while we are building up our domestic business. I must say, all of it, what I have said above, has seen a strong support coming from our investment management capability built over a period of time at Birla Sun Life Mutual Fund. The team consisting of, I'm sure you're all going to hear in a while, CIO Mahesh and Manish, along with the team members, have delivered wonderful investment performance in creating a well-respected investment process and consistent outcome for investors. As practiced globally by any leading investment management firm, we have created our own strength in carrying out our day-to-day investment management activities in a manner that ensures that consistent performance is being delivered for long term. As I have spoken in the last conclave, that the fundamental principle and the philosophy with which the fund house operates, that the people, process, and investment philosophy remains at the center of the guiding principle. And these guiding principles, I believe, are sufficiently supported by 3 C's, which is going to be the theme for the day today. The first C is clarity. Governed by our evolved process over time, this pillar drives the functioning of our team as it works like an anchor that provides the clarity of what needs to be done. The second C is a commitment, which of course is the most important for any business, is what transforms the promise into reality. Our committed people are our most valued assets, guiding us towards the bigger and better opportunities with their expertise, dedications, and insights. The third C is the consistency in our performance, is the results of our persistent efforts over years. And as I speak, we are completing 20 years of existence in the mutual fund industry space, giving all these C3 or C what I talked about, and it's only keep getting better and better. Our funds have performed very well in the respective categories, thus setting an example of consistency in guiding you and your customers across a successful journey. Here I find a quote which I felt very apt from Warren Buffett. Only when you combine a sound intellect with emotional discipline, you get rational behavior. The 3 P's and the 3 C's, which I have talked about just now, should have taken us somewhere, and I trust it reflects in our investment performance. I'm happy to share with you that the most of our equity schemes have delivered consistent performance, beating the benchmark, respective benchmarks, ranging from 5% to 40%. Our equity funds beating the respective benchmark by substantial margin is a true reflection of our commitment towards delivering performance and also showcase our ability to spotting opportunities. The same way in fixed income, we as a fund house have delivered returns over 1 year, fixed deposit category consistently ranging from 1% to 7%. And this output and the performance has come only due to the fund management style on the basis of fund management capabilities in identifying investment opportunities at all points of time and bringing it as part of the portfolio construction. As you all know, we as a fund house have witnessed one of the largest inflows in equity, and thus we have improved our equity rank from number 7 to number 5 as of 31st March 2015. And we have been consistently improving our overall assets under management in the last 5 years, and thus we have reached the number 4 position in the mutual fund industry. We stepped up our focus in building size through right asset class and at the same time expand our business. We would not have reached number 4 positions in overall assets under management, but for our continuous effort in growing our fixed income assets, especially when equity assets were falling a few years back. About 1.5 years back, equity assets were not considered as the best asset class for investing in India. At the same time, we had to build our business and service actually the large pool of customers. My colleague who is sitting here, Seva Fixed Income Manish Dang and his team, remained highly focused and committed in building fixed income asset class during this period with lots of determination. The performance support that we received from all stakeholders in our growth journey has been due to our ability to identify new trends and identify new products from end consumers' point of view. The case in point, the launch of Dynamic Bond Fund. Dynamic Bond Fund is an example which has created niche for itself, and today it is the largest fund in its own category. And the fund too has delivered consistent performance in the 1 year, 3 year, and 5 year bucket, beating the fixed income benchmark at all point of time. While we have built ourselves in the duration play quite nicely, our ability to spot opportunities in the credit space has also brought us leadership positions in the credit-related funds. Our team has invested in more than 55 credits of different kind, covering a wide array of sectors, ranging from NBFCs to the manufacturing sectors, with a strong underlying understanding of the governance that is attached to every investment that we make in order to ensure that the customers are always protected. Our efforts to build leadership position in equity reflected not only in our overall AUM number and also net inflows, it also reflected in having sizable funds in the equity category. And Mahesh, our CIO equity, whom we are going to listen soon, and his team stayed extremely committed in focusing on delivering consistent performance, not just today, but for the last 10 years. And today the fund size has crossed 9,000 crores, being the third largest fund in the large cap category, large cap diversified fund equity category in the mutual fund industry space. On a similar line, we continued our efforts to build size in other funds too. And today I'm happy to say that we have 8 funds with more than 1,000 crore size, and each with a different investment style. And Mahesh and his team have maintained the philosophy of focusing more on stock picking in order to deliver long-term sustainable performance. I'm happy to say that expertise the fund house has created in the 2 asset class through 3 C's has brought us high level of synergy between the teams and the teams in order to make Birla Sun Life Mutual Fund as a process-driven asset management company in the Indian mutual fund space. And we at Birla Sun Life Mutual Fund, having completed 20 years in the Indian mutual fund space, and have grown the asset size beyond 1.2 lakh crore and remain extremely bullish in the years to come. We believe that India will see the best of the days in the coming years. We need to gear up quite rapidly, especially at the time India becomes an economy larger than China, as it was introduced in the beginning in terms of growth. I think it's just a coincidence. It appeared in Economic Times front page that India's growth rate actually has exceeded China's growth for a year. And this gets further boosted due to the sustainable global easy liquidity that remains. The deflation is being a concern for global market. I'm confident the next year of the Indian mutual fund equity growth will be as big as FII flows in the capital market. Indian mutual fund industry will probably grow faster than what you have seen in the past few years, with the AUM crossing 20 lakh crore, with a higher share coming from equity. The asset mix could potentially come a little bigger than in the coming years coming from equities and asset class. And we at Birla Sun Life Mutual Funds are fully geared up to participate in this growth opportunity and become leader in managing large assets coming from large customer base. We at BSL AMC believe, and I'm sure all of you will agree with what I'm saying, that we are now entering a phase where financial assets will become the instrument of choice for personal savings and wealth creations. But having said that, we are all aware that the mutual fund penetration levels are still very low, which only enhances the scale of opportunities and going forward. So we can continue to remain extremely optimistic in building the business to the next level. The percentage of mutual fund assets as compared to the bank deposits are in a single digit in most cities and towns in the country. Therefore, I'm confident that the Indian mutual fund industry will not only strive to have a larger share of bank deposits in the country, I'll also not be surprised to see the customer base higher than 20 crores very soon in the next few years. Our efforts to reach out to all partners in all locations is an effort to increase the penetration and reach in the market. Not only get our customers, but also to build a larger advisor base working with us as a partners to support our journey.